Hi, I'm Steve Monacelli, and welcome to another episode of What the Hemp. Today I'm joined by Dan Mayo, who leads our national tax group, and Brian Silva, who is a partner, co-lead of the cannabis group. So we'd like to discuss today the 280E rescheduling, what it means, the theory behind the non-280E position that people have been claiming and some people haven't been claiming. So without further ado, as everyone knows, Donald Trump issued an executive order on December 18th for the Department of Justice to actually reschedule cannabis. So obviously, it's probably the best news the industry's had for a very, very long time. And we'd like to talk a little bit about what that timeline looks like. Brian, maybe you can dive into what needs to be done for rescheduling to actually be effective and for 280E no longer to apply to a cannabis operator.
Yeah, so as far as the executive order, it was just a way to expedite or move forward with the rescheduling. It doesn't actually create rescheduling, unfortunately. It was put in the media to do that a little bit, that it rescheduled cannabis, but it really didn't. I just talked to an attorney group who I work with really closely this past Friday, and they're in the boat that they think it's about a 6-month process to get cannabis rescheduled to Schedule 3. I know, Steve, you have much different opinions from some of your clients and other people that we've talked to.
Yeah, it's interesting. I was speaking with an equity researcher who wrote a white paper on what it takes to actually get the Department of Justice to actually move on rescheduling. He is estimating anywhere from 12 months to 24 months. Some of the things that he brings up is that the Department of Justice, first of all, has to actually either finalize or restart a rule based on certain events occurring or not occurring. And on top of it, the DEA actually has to have some actions in this. They have to publish the proposed rule, conduct a public hearing period, hold administrative law judge hearings, issue an administrative law judge recommendation, draft a final rule, approve a final rule, which is done by the DOJ, and submit the rule to the OMB. Both the DOJ and the DEA must actually take action there. But the DEA then has to publish the rule and possibly any defenses in court or some action by Congress. I know there was a bill that talks about not using funding to take any actions to reschedule cannabis. So I think, when you actually
It's a
look at
lot to
all of
do,
the
Steve.
steps, it's a
That's a
lot.
lot of stuff
Exactly.
to do. My God.
So I guess
So
it's looking like after the midterm elections, possibly.
exactly.
I've heard people too say that there's motivation to get it done before the midterms. I just don't know if it's possible. It might not be possible to get it done that quickly.
We are talking 10 or 11 months, and I'm hopeful, but let's see how this plays out. But in the interim, let's talk a little bit about a lot of what people have heard and some of the positions that have been claimed, the non-280E position, which is current. People have been taking the position with tax opinions. But Dan, maybe you can enlighten us a little bit on the non-280E position, what it is, how do you claim it, and what basis do you really have to have in order to really make a good argument here?
Yeah, so there's many arguments that people make to argue that Section 280E of the Internal Revenue Code does not apply to cannabis businesses. But the principal argument, though, that seems to resonate with most people is the within the meaning argument. And this is saying the question here is cannabis within the meaning of Schedule 1, notwithstanding the fact that it's designated as a Schedule 1 drug. And so when you look at the meaning or definition of a Schedule 1 drug, essentially it's a drug that has no medical purpose. The problem with that definition is that the FDA has approved a number of drugs in the past, call it 10 years, the number of cannabis-based and hemp-based drugs that have been approved by the FDA. So the question is cannabis within the meaning of Section 280E, notwithstanding the designation of it as a Schedule 1 drug?
Yeah, and
Understood.
I think too a big piece on that is that's ultimately what Donald Trump is saying in the executive order as well. If you read through it, it's the stuff Dan just talked about. It's the drugs that have been approved. It's the Health and Human Services recommendation to go to Schedule 3. It's the DEA's recommendation to go to Schedule 3. So what's funny is it's almost like Trump agrees with the non-280E position, which I know it's not going to get you through court or anything, but it's just another thing that you can kind of lean into when you're making your determination as to how you want to go.
So Dan, this non-280E position, if someone wants to claim this position, there have been recommendations by not only Withum, but other accounting firms as well in the space for the need to get a tax opinion letter. Can you talk a little bit about the reasons why that practice is highly recommended?
Yeah, so the IRS has come out obviously against cannabis and 280E, saying that 280E applies to cannabis. And so the question is, can a taxpayer take a position on a return to withstand and to avoid penalties in the event that the court ultimately determines 280E applies to their business? In order to avoid penalties, you need one of two things. You either need substantial authority for a tax position, which is roughly a 40% likelihood of success on the merits or higher, or you need, and if you have a substantial authority, meaning there's a piece of guidance you can rely on that as a substantial authority, and there's a list in the IRS regulations. You don't need to disclose it to the IRS in order to avoid penalties in the event you ultimately lose an audit or in a court. If you're below substantial authority at a reasonable basis level, which is generally thought to be 20 to 30% likelihood of success, if you want to avoid penalties at that level of comfort, then you do need to disclose it on a return, usually Form 8275, a separate disclosure that alerts the IRS you're taking a position that they disagree with. The position then that even though it is a low likelihood level of success, for many there are appeals currently pending, which could affect the outcome of this position and ultimately turn it around, reverse it. So we do recommend opinion letters because the burden of taking any position is on taxpayers, right? The taxpayers have the burden to prove their entitlement to a deduction. So in order to do that, we recommend they get an opinion letter to justify the non-280E position.
Understood. Has any of that changed in light of the fact that it certainly looks like the president is pushing towards rescheduling? If I'm a small operator and we have a discussion relative to a tax opinion letter, well, these things could cost $25,000, $50,000. What's it mean for a small operator who wants to take a non-280E position? And I also just wanted to highlight, when we talk about a 20 to 30% chance of sustaining a position, with disclosure, technically that reasonable basis position would, if we lose the position on audit, should be able to provide us penalty protection relative to certain penalties that can be assessed by the IRS that are pretty onerous. If we don't get that opinion letter, or the small operator, let's say, waiting for rescheduling to happen, what choices do they have, Dan?
Yeah, they really shouldn't be taking the position then, because in order to avoid penalties, the taxpayer needs to show they had a reasonable basis. So the question is, what efforts did they undertake to establish that reasonable basis? Did they do their own investigation? Did they rely on the advice of a professional? Without doing anything, it looks like they did nothing and made no effort to take a reasonable position and to ascertain the correctness of that position to see whether it met that reasonable basis standard. Reasonable basis is a colorable position, more than frivolous, less than substantial authority.
When I think of 1 out of 5, I think of a baseball field and 5 pitches are thrown. You need to be able to hit 1 ball out of the 5. That's a pretty low bar. So that is really just a penalty mitigation strategy. There's still a dogfight on an audit. Truthfully, you've got to get that tax opinion letter, I think is something in the coffers that helps you with the argument in either appeals, district court, tax court, wherever you land. And can you talk about amended returns? People have approached this over the last couple weeks and they're saying, okay, this is great. I want to go back. I want to file amended returns. I want to claim all my tax that I've paid associated with the disallowance of expenses on 280E.
Yeah, and the amended returns around the non-280E position aren't brand new either. They've been happening for a handful of years, with many taxpayers taking the position, but there's a mix of success and likelihood and risk in those amended returns too. I would say a couple years ago, you could file an amended return and there was a chance the IRS would let it slip through. They weren't really ahead of the position just yet. And we did hear about some refunds and things like that, but then some of those companies are under audit now. So it was, it's a mixed bag of success if you went back a couple years. Now, basically, since, for at least the past year or so, year and a half almost, since the IRS really came out with the fact sheet, they've basically not been processing these amended returns. So they're not really interested in the no 280E position. They've been very upfront about that. So it's a long road. Like if you want to amend your return, and many are getting a no consideration letter or not necessarily a straight out They won't process it. It's more like we won't even entertain it. We're not going to look at the return. We're not going to process it. We're not going to reject it. We're kind of in the middle. So then it's a long road with your attorneys to figure out your next steps. If you are either going to appeals or suing for a refund or doing multiple different strategies to try to continue that road, it's a long, costly road. So you really need to talk to your tax professionals and attorneys and look at cost benefit if you're thinking about an amended return. I'd say most companies starting maybe a year and a half ago, like I said, are really just looking at a prospective basis. They're living with the past and taking the no 280 position moving forward. Now, I do find an interesting angle once we get the rescheduling. Let's say rescheduling happens in June 2026. Let's have some fun for a second. I think it'd be very interesting to see now you're no longer arguing if they should change the law. You're now just arguing the timing of the law. So that might start changing amended returns and how people are thinking. So we're definitely talking to a lot of our clients about let's wait and see it and see what the options are once the rescheduling actually comes out.
Yeah. So basically what you're saying is the executive order itself really has no effect on amended returns. The IRS basically said that until they see rescheduling actually become effective, they're not processing amended returns at this point.
Yeah, I think it's another consideration for whether you should amend returns or take a no 280 position, but in the eyes of the IRS, they haven't changed their mind overnight or anything now.
Yeah, and just to be clear too, the statement, while helpful to bolster Brian's point, it's not considered authority you can rely on in a court or an IRS proceeding.
So Dan, if there's no amended returns being processed, and then all of a sudden magically there is a rescheduling that occurs, and there's some pronouncement or something issued on effectiveness or effective dates, what's the window looking back that someone could actually, assuming they allow us to go back to a certain date, and that date includes prior tax periods, what is the statute of limitations that would preclude us from filing an amended return and claiming a refund? What's the time window?
So generally speaking, with an amended return, you have 3 years to file an amended return, 3 years from the later of the due date or the filing date of the return. If you file, the interesting thing is when you file an amended return, you do not extend the statute of limitations. So you're not giving the IRS more time to audit the return. And unless you do it within 60 days of the close of the statute of limitations, if that's the point, the IRS gets a little more time because they don't want a taxpayer stuffing the IRS with a position right before the statute expires. So generally 3-year period. There is a 6-year rule for gross omissions of income, which would not apply in the case of deductions. And then there's an unlimited statute for fraud, which again wouldn't be implicated here.
Understood.
And just for clarity too, we're not really expecting retroactivity on rescheduling. Now, if you want to take a creative position with the amended returns and things like that with a no 280 position, that's definitely something we're talking about. But I don't think anyone's expecting the rescheduling to say this is effective as of January 1st, 2022 or something. We're not expecting that. So
Right. And I think the IRS came out unofficially saying they will provide guidance if and when rescheduling occurs on how does it break the tax year? Does it split the tax year into two? Does the taxpayer take the non-280 as the beginning of the year, or do they have to wait until the next tax year? So we do expect guidance on that shortly after rescheduling.
Understood. So assuming someone takes the position, the IRS doesn't process the returns, what are their choices at this point? I call it the John Wick scenario, because they've got to go in with guns blazing in some court in order to actually force the IRS to address their claim for a refund. What does that look like, Dan?
It's expensive. First of all, right? It's a long, expensive process. Right? The taxpayers will have the obligation to sue for the refund. They have the choice of courts. After you make the selection, you file a suit. There'll be some possibly settlement discussions. Maybe it goes to appeals. At some point, though, you'll get a decision, and then you have to decide whether to appeal that decision. So I think taxpayers should expect a long, expensive road if they go the litigation route.
Speaking of long, expensive roads, that leads us to our last topic, and that is defending a non-280E position in the interim. Should you choose to take a non-280E position and you are selected for audit, it's been our experience, unlike many other industries that firms get audited in, that the entry level or the first position field auditors, I should say, are actually pre-programmed to really not negotiate anything, not to hear anything. They want to bring it to appeals. Once they bring it to appeals, typically you've got legal counsel involved, and that's going to go to appeals relatively quick. And then you've got a choice of forums relative to advancing this. And the legal fees, in my opinion, it's going to be quite a journey. And I think unless you've got the capital to be able to defend the position, you really got to think twice about whether or not you should take the position, because some companies in the industry are in a much better position to be able to take that journey and bring it to a close. This could be anywhere from $250,000 to $1 million if it really goes awry. And those legal bills come in every month. So we wanted to be really open and honest relative to what a bad outcome would look like. And there's no telling that you will win the position at the end of the day. It's hazards of litigation.
And people have lost on the position. There are reported cases where people have lost.
That is true.
There really haven't been any successes in cannabis, honestly. There really haven't. It's 20% at best, I'd say.
Yeah. So there is a New Mexico case in the works right now that everyone is awaiting for something to happen. And they are claiming the non-280E position. And that is risen to a pretty advanced level at this point. I mean, if it settles, we won't hear about it. But if it doesn't settle and there's a decision, then that may be a game changer for the industry. So that being said, thank you very much for joining us today. Stay tuned. We've got more podcasts coming to really talk about various factors and facets of cannabis as it evolves.